Running a nonprofit organization can be very different from running a for-profit business. Instead of a single owner or maybe a small group of business partners who can largely do whatever they like, you have a board of directors to answer to. You've got extensive oversight from both the IRS and the Ohio Attorney General's office. Not to mention, you've got to keep both your donors and your grant funders happy. You've probably got to keep a group of volunteers happy as well. And this wide array of stakeholders means your nonprofit needs good governance policies in place to prevent problems before the organization's tax-exempt status is threatened. So what do you need to know to maintain your organization's tax-exempt status? First of all, you have to file an annual 990, no matter how small or how large your organization is. For my smaller nonprofits, if you're less than $50,000 in revenue, you'll do what's called the 990N postcard filing. It's very simple. You go onto the IRS's website and they essentially ask you, how much money did you raise and how much money did you spend? And you're done. Once you get past that $50,000 mark, however, it gets a lot more complicated. If you were between $50,000 and $200,000 in revenue, and or you have more than $500,000 in assets, then you will do what is called the 990EZ. Now here I think that EZ truly is a bit of a misnomer, and at this point you really do need to have an accountant helping out with that annual 990 filing. So once you graduate over that $50,000 in revenue mark, it really is time to get an accountant on your team if you haven't done so already. Every other nonprofit organization will do the standard 990. Now, if you fail to file that 990 for 3 consecutive years, the organization will lose its tax-exempt status. And that Form 990 is typically due May 15th, although if you want to be super technical, it's 5 months after the end of your fiscal year, so you'll figure out what that 5th month is, and it's the 15th day. Now here in Ohio, and most states will have something similar, although the office that's doing this might change, but Ohio nonprofits also have to register each year with the Attorney General's office, and they have a charitable division within that office. Now, technically, if your organization receives less than $25,000 in revenue, and we're not counting grant money, and you don't pay a professional fundraiser, then your organization is actually exempt from this registration. However, the AG's office has been really harping on this, and they tell everyone to register. Let them decide who's exempt and who's not. The fee ranges from $0 for organizations that are under that $25,000 threshold, and again, that's not counting any grant money that you might have raised on top of that, and it goes up on a sliding scale up to $200 each year. The AG's registration is due at the same time that your 990 is due, and if you're a newer nonprofit, as soon as that organization gets created with the Secretary of State, you'll typically get a letter from the AG's office reminding you to do that initial registration as well. A few other ways you could potentially lose your organization's tax-exempt status. One is that if you're operating for the benefit of an individual, or you're funneling money to an individual. And this is why it is so incredibly important to have and follow a conflict of interest policy. Organizations that operate as a nonprofit need to be very careful about not only how they pay people and how much they pay people, but who they're paying and how those decisions are being made. Nonprofits can also lose their tax-exempt status if they engage in too much lobbying or they get involved in political campaigns. Now, we'll do a separate series of videos about this, but the short answer is that nonprofits are allowed to engage in issue advocacy, right? You can talk about the issues that are going on in the world, but if you are a 501c3 in particular, you cannot advocate for specific legislation or for specific candidates. That's when you cross the line into lobbying. Nonprofits can also lose their tax-exempt status if they start to pick up too much of what the IRS calls unrelated business income, and we'll talk about that more in a series about social enterprises and how to structure those for nonprofits. But suffice it to say that for right now, most of your income as a nonprofit organization should be funds that you are raising that are supportive and related to your charitable purposes. And finally, you can lose your nonprofit status if you are changing your activities in such a way that you no longer exist exclusively, and that's the key word, exclusively for your exempt purpose. So you really need to keep a strong eye on what the organization is doing and why it's doing those things. How is it going about raising funds, and are those funds getting reported to the right government agencies at the right times?